In some consumer news, mortgage rates are finally coming down, and many financial experts say this is good news for the housing market. If you bought a home when rates were high, you may be asking, is now a good time to refinance your mortgage and lower your monthly rate? In today's Consumer Watch, Jenn Sullivan explains the pros and cons of refinancing.
The American dream of owning a home has remained just a dream for many potential buyers as the reality of high prices and high interest rates has shut them out.
The elevated mortgage rate reduced the transaction activity.
Lawrence Yoon with the National Association of Realtors says home sale prices aren't likely to come down anytime soon, but lower interest rates will make owning a home a little more affordable. As of last week, a 30-year fixed mortgage rate was 6.3%, according to Freddie Mac. In mid-January, that number was more than 7%. If you did buy a home when rates were much higher, is now a good time to refinance your mortgage and get a lower rate?
The bigger spread that you can have between the rate you have now and the rate you'll get in the future, the faster that break-even point is going to arrive.
Stephen Cates with Bankrate says refinancing your mortgage can be expensive. It typically costs between 2 to 6% of the new loan amount. Then there's closing fees. Bankrate came up with this list breaking down just how much you can expect in other costs.
You're going to be doing a lot of work because essentially you're rerunning an entire contract for your home.
Kate says you have to really crunch the numbers, and it may be better to wait until rates come down more.
You may be slightly worse off financially in terms of, the net benefit to you over the next few months or even few years.
If you do want to refinance, Cates recommends shopping around for the best rate. You don't have to stay with your current lender. And make sure your credit score is good. The higher your score, the better rate you'll likely get. For Consumer Watch, I'm Jenn Sullivan.